Hello everyone, welcome back to Chill Deal Trades, where I analyze stocks so you know what's going on. Today we're going to be covering probably one of my favorite SPACs that is now kind of already reverse merged, and it's Maps, which is Weedmaps. So we're going to break down both kind of an overview of the company, who they are, what they do, as well as maybe where they're going as a company, and then we'll dive into the charts and do some technical analysis to figure out where it might be headed in the short and long term. If you haven't hit the sub button, please do. I'm sharing you. This is probably one of my top favorite companies out there. So please hit that sub and support the channel and join the squad. So first thing is Maps, Weedmaps. Who are they? So Weedmaps is an online platform. They have a website and a mobile application where they basically are a platform where people can find marijuana for medical or recreational reasons. And then they have both. They kind of serve two people. So they are a place where weed companies can find or list their companies on there so that people can find them. And so dispensaries for medical professionals, storefronts, and delivery services. So they have pickup or delivery service aspect of their app as well. So they kind of do everything, anything with someone trying to get weed. I'm just going to call it weed, not marijuana. Anyone trying to get some weed, this is a platform they can use to get it to their house. So just a little bit of background on them. So they've been around for 12 years, an extremely established company. That's one of the reasons I like them. They're currently in 9 countries. They have over 10 million users on the marketplace. They have over 18K businesses that list on their platform. And on the right side of the chart, you can kind of see how they've grown over the last 5 years. So in 2015, they did about 43 million in revenue. 5 years later, they're at 160, and they have even pretty lofty projections moving forward. I'm going to move my camera, actually, because I think I'm going to be blocking a bunch of stuff during this presentation. There you go. And their EBITDA is even growing, which is a positive for a company, kind of after expenses and everything like that. So seeing a 3x in that and a 4x in the revenue. There you go. So I think one of the things that why I want to be in this space as an investment is the growth of the industry. So, when it comes to buying into a weed company that's actually they grow and sell, that's a little less interesting to me. I want to own a company that actually helps distribute or get it out into people's hands. And we'll get to more of a reason why later. But just look at the marijuana industry. It's going to explode over the next 4 or 5 years. And that's kind of partially due to just the legalization and decriminalization of it. So 18 states currently allow people to use it recreationally. 40 out of 50 states have some type of medical weed legislature for usage. And 31 of 50 states have some form of decriminalization. This is kind of a trend we're seeing, especially over the last, I'd say, year and a half. There's been a lot of news coming out about states, we're legalizing it, we're allowing people to use it recreationally. And I personally believe this is going to be something that's only going to accelerate over time as kind of our country in general becomes much more progressive. I think more and more states are going to legalize it, which will only help this company over the next 4 years really grow their business. When we look at leadership team, I would say this is something that's often overlooked, but it's really important. And the reason I bring this up is just look where their leadership team have worked. They've worked across multiple types of industries, and as well as really large companies, from social media to online shopping platforms like Instacart, Google, Nike's, consumers, banks, just kind of everywhere you could think of. Their leadership is team, which is really good to have a foundational team behind the business. So they were a reverse merger, which was a SPAC. And just to bring up some of the details of this, so they IPO'd, or not IPO'd, but SPAC'd at $10. And at that valuation was a 1.4 million valuation, and they were 1.8 times their 2021 revenue, which is really amazing. I would say most SPACs are priced quite a bit more than that, and they're 28 times EBITDA. A lot of the companies I've seen here, they can be 50 times revenue or 100 times revenue. And so this company and that's like even future revenue. This is talking about 2021 revenue. This is something I really love to see. And kind of on the right side of this chart, there's a lot of information, but just on the right side, let me get my little mouse actually. Even when we project in the future, assuming 2022, 4.7 times Like their valuation, I believe, is very, very cheap compared to a lot of the SPACs, and that's another reason why this has been a SPAC that's on my has been on my list. I'm not a financial advisor. It's something I own personally for the long term, and I'll continue to acquire shares over the years. Now, kind of comparing them to other companies, this is not a great example, I would say, because they don't really have a lot of competitors, but kind of in the space. They're really a technology and SaaS company. And so just looking at 6.8 times 2021 revenue compared to some of these other companies, I think they're the cheapest out of all the companies listed here. When it comes to revenue, 0.2 times, one of the cheapest companies. And this is just something you see across this entire thing. They're priced very cheap compared to the industry. I think it's because there's a little misunderstanding of what they do as a company. They're not a weed company. They're a technology company. And that's something really important that I think a lot of people are overlooking it. So kind of looking into some of their projections, and kind of already said they're expecting really large growth. So comparing it to 2020, which we did hit about 160 million revenue, 2023 they're expecting to grow to 440 million. So this is pretty lofty, but I think some of the points we've covered with legalization kind of growing, with the marijuana industry growing, generally speaking, I think this is doable because they are the market leader. They're expanding their platform, which we'll get to in a little bit later. And when we look at their growth rate, 40% growth rate, on average, gross margins going from 150 million to 40 million. And the main call out here is their gross profit margin. Over 90% gross profit margin. This is something you don't see very often. And what this really means is that they can use a lot of money to grow the business. They don't have a lot of costs. Especially, if you think of like a Nike or something, like they have to make the shoe, things like that. They're not growing the weed, making the weed. They're not growing the weed. They're just the intermediary between getting it to a person. And that makes their gross margins really large, which means they can reinvest in the business and grow it quickly. And the last thing, EBITDA. This is already an EBITDA positive business. So when you look at a lot of these SaaS and tech companies, especially a lot of the SPACs, a lot of them are expecting negative EBITDA all the way out to like 2025 or 2024. This is a company already EBITDA positive, and that's only growing. As you kind of see, their margins here is expected to increase over the years as well. So you just see really amazing growth expectations as well as amazing margins, which are two things I really love looking for a business. So as I mentioned before, they kind of have two sides of the business. So one is the user. So 10 million monthly active users. That's crazy. 8 minutes average session. This is unheard of. I work in the e-commerce space, and when someone goes to your website, it's usually maybe a couple minutes. So 8 minutes, someone's searching around and trying to find something. That's a really high engagement rate. 70. This is one of the stats I love most. 70% of users consume daily. So they're on there. 7 out of 10 people are on there every day looking. And then last, $100 AOV, and we'll get into some more stats about that later. And then the second part of the business, the client side. So businesses that are listing themselves on their platform. So they have a little bit over 18K business listed. This is from, I think, 2020 stats, so it's grown since then. They have 4K of those clients on a subscription, and we'll talk more about that subscription aspect. The average client is giving them about 3K a month on average, which is pretty decent. As that number grows, that's obviously going to benefit their business. So those are a couple things and kind of breaking down kind of both sides of the business and the value prop. So this is one of the aspects I would say I like the most about the company is their business in a box solution. So they don't want to just be a platform. They want to be in everything for these dispensaries. And this goes from being an app where people can browse to, if we come down here, actually having in-store basically checkout, kind of like I think Square and other companies having those for these dispensary companies. They want to have platforms so companies can look at their data and analyze the traffic and have better insights on how they're performing on the platform. So they're really trying to build this entire ecosystem for their clients, and we'll get more into it as well. So I think, why would people, use them? Why do people want to get into their BIAB platform? And when we look at it, so this is pre-COVID, post-COVID. So they've only seen that AOV has gone up significantly post-COVID into COVID. And so seeing like a 67 to 86 increase in an 86 to 89 increase in delivery, and then a 76 to 108 pickup. That's a 30% increase. And one of the main things I want to mention here is the in-store transaction. So those are people not using. These are people who come to the store without using the app. Look how much additional revenue that this platform can help businesses. And this bottom part is something I really want to call out because I work in the digital advertising space. And so they're saying we can get people a 5 to 8 ROAS. And so what that means for businesses, they spend $1 in advertising, they're expecting them to get $5 to $8 back in return. That's an amazing number. And part of that reason is that their costs are so low on their platform. And so some platforms don't allow you to, advertise for marijuana, but if someone's trying to go on Google and advertise, it's so much more expensive. So it's a place that a lot of businesses haven't really used this growing platform of advertising. I think it's going to unlock an even bigger part of the business and more revenue for the company. I'm not going as fast as I want to do this, but this is something of like why clients should use their BIAB system. And what this chart tells us is people who use it are going to see better engagement from people on their app, as well as it's going to help them list higher on their app. So they're trying to incentivize businesses to opt into their bias platform and saying, if you opt into this, it's actually going to benefit your business and we're going to give you some leverage. I need to go through this because I'm not going so fast. So one thing I always look at companies is their institutional buying. So there's not a whole lot of data out there I could find because they've just reverse merged. But the main thing I want to call is look at all these people who've made significant investments in the business just in the last month. So, we saw a peak back in February. It's kind of come down from there, and more recently over the last month. And these people have bought large percentages of the business as it's come down. So institutions are buying in large bunches right now because they know the stock is undervalued. So I just want to call out a couple things why I believe the company is special. So it's not really a weed company. It's a SaaS company and an advertising company that's disguised as a weed company. So they have a proprietary software and system specifically made for marijuana users and businesses. So I think there's a risk of maybe like an Uber or something, eventually getting into the weed. But what makes them special, this platform is just for these companies. It's built for them, and that's what I think is going to differentiate them in the long term. The other thing I love is they're an established company, so they're income generating, which a lot of companies aren't, especially in the SaaS and technology space. And they're using all that money they're making just to invest into the business and grow the brand and the technology. And the last thing is this industry is growing exponentially, as we mentioned earlier in the video. And I think that only gives them an advantage because they are the current leader, and as it expands, they're only going to take up more of that market. So that's all I have on the slide part for you. I want to go to charts real quick in the last couple minutes just to see where they could go. So I would say big picture, it's still not looking so good for the stock. I would say we're still overall in a bearish momentum. But at these levels, I really like the price, and that's why I'm personally purchasing. I'm not your financial advisor, but this is something I like. I do believe the stock's going to have a hard time getting over the 17. There's just a lot of friction in the market, especially the small caps, as some people are a little worried about the economy, not in terms of demand, but in terms of what the Fed's doing, and I think that's affected small caps the most. But I really like it at these levels, and this is something, if the stock continues to go down further, I'm personally going to continue to buy because I really love this company long term, and I want to make it a long term investment for myself. And so I'll be doing updates on the charts just to see like how it's looking, if there's a really big red flag that's not a great time to invest, and maybe we need to wait longer. But I really love this company. In the short term, my price targets are really around the moving averages. So as I said, somewhere in this $16 to $17 range, we have all the moving averages there. I'd say it's going to be pretty hard for the stock to break out above that in the short term. But if they do, then we're going to definitely see more bullish momentum to the upside and hopefully break above this long-term downward trend line that we haven't been able to break above. That's all I have for you guys. I hope you liked the video. I'll be doing updates on the company because I really love it and it's one of my favorite. So please sub if you haven't. And I make a video every day, so I'll see you again tomorrow.